All right, guys, welcome to today's special options program here with Nic Chahine. Today's the Halloween special as well. So we're going to be starting here in about 2 minutes with Nic Chahine. And in the meantime, in the chat on the Zoom, let us know where you guys are tuning in from. We also put out a poll, the Singer Sentiment Indicator. Basically, what do you think is moving the markets right now? And let us know where you guys are tuning in from. We're going to be starting in about a minute here. Got people from Austin, Canada, Virginia, Nigeria, Cali, Georgia, Indonesia. Good stuff. A little bit of everywhere in the world. All right, guys. So we are going to get started here in a little bit. Not sure here. Let's take a look here, see if Nic is in the house. Nic, are you in the house already?
I am. I've been chatting. I am.
Okay, yeah, I see you there. Okay. Yeah, if you don't mind, start sharing your screen here so we can start getting into it and go over the Singer Sentiment Indicators, see what guys are thinking today.
Okay, let's share the screen. And it warns me that I'm taking away your screen. I was like, don't even ask, just rip it away. He doesn't deserve it. Just rip it away. Okay. So hopefully you can see my screen. I'm excited about today because I have the usual pieces of wisdom, whatever you want to call them, lessons. And then I will immediately show you applications to that lesson. So the Singer sentiment says what? Are we too soon?
No, let's check here. 1 second. No, there's 84 people of 124. So let's see.
Okay, let's wait then.
Yeah, we can get a couple more folks there to
So vote. Let me talk about what I think is going. I just finished a webinar session with the people in the chat room.
Okay, how was
it? It was good. It was fastest, an hour and 20 minutes. Usually it takes 2 hours because I did the homework at 4:30 in the morning and I had the charts prepared so that the session will go quicker because of this, because I know I needed to come here and I have something else to get to right after this. So I do have a hard stop at 1 hour and 45 minutes, maybe 2 hours stretch max, but I do need to leave. So the focus was addressing their tickers. And I can tell you that the tickers I got, I think this week was low. It was 82 or 85, I can't remember. And we went through all of them and they were all over the board. So they weren't just all piling into one thing. So the gang from the chat rooms are all over the board, which I like to see because they are not crippled with the news and they're not completely just focusing on, say, the earnings. This is next week's earnings. So for next week, we have the potential, listen to the words, the potential to have a big emotional response, which I'm telling you this so that you can be ready to take advantage of other people's emotional response. So how do you take advantage of it? Shut off the expert opinions because they cannot tell you something you don't already know. So I'm going to lay it out. First, we have a jobs number. We have the preview of it on Wednesday with the ADP. That's the private jobs number. It comes out at 4:50 my time in the AM. And Friday's government official jobs number. It doesn't mean anything right now. I'll tell you why. From a price perspective, the jobs are what they are. We have a lot of jobs need to be filled. We have very low unemployment, regardless of what you think happened last month. Given the circumstances, everybody that wants a job has a job. Everybody that has an opening cannot fill the openings. So we have more jobs than people. So that's not a bad jobs demand. So jobs is not an issue. The market dislocation is the issue, but it's not a deal killer. So it's not going to cause a crash because we have open jobs. That's my opinion. So it's not going to matter to the bottom line. It will matter to emotions, which is what we want to take advantage of. So that's the first risk. If we fall on a jobs, whatever the headline may be, I would buy the dip. And then it comes down to at what level, because that depends on my speed. If I'm super fast, I may start buying dips around 453, 451. If I'm slightly slower, I would wait to 446, 443. If I'm trade once every couple of months, I should wait for the dip into 430, 429. And if I don't trade except when the market's correct hard, anywhere in here, I would load up the boat. So next week, we do have these emotional catalysts. This is one, jobs. The other one are the earnings, but that's all over the map and that's company specific. Like what happens with Roku is not going to break the market. So we're talking top level. Now, the other one, the big one is we do have a Fed meeting. So he's not going to say anything new. Like he's not going to say, hey, we thought about the new thing we're going to do. Whatever he's going to say is announce officially what he announced last month. Last month, he unofficially announced the taper. Why do I say that? Because he said, we're not announcing today, but hey, we're going to end it by the middle of next year. So he's not announcing the beginning, but he told us when it would end. It's like, how crazy is that? Is brilliant, asinine, but brilliant how he did it. I don't like him for doing what he's doing, but this was the best way to not have a taper tantrum. So what is a taper? Taper guarantees us a QE extension until the middle of next year. That's what it means. It's not bad news. They currently buy $120 billion a month in assets. The taper means they will buy fewer assets. So that's the number that's a variable. Everybody's expecting him to announce a taper this month, saying, next month, we will start buying fewer assets. That's the taper. So he announces it now. It starts next month. That's, I think, what the underlying baseline is. The other variable is how much less. So if he says we're dialing it back 10 billion, so that means they need 10 time to deplete 120 billions worth. Every month they buy 120. So every month they'll buy 10 less, 10 less, 10 less until it gets to zero. That's the number of months you need. If he says 40, I think that's a bit of a problem. That's way too fast. Then he would have lied. So I think it's going to be somewhere around 20 billion less a month. So if it's anywhere near that, that's what the market expects. If he says no taper, I think the market will blow up in a good way. If he says taper and is very mild, or taper and starting January, that's going to be bullish. So whatever reaction happens, you know now the variables. You know what changes. What you want is what changes the game. If nothing changes the game, then whatever is going on is going to continue going on. And what's going on is a bullish rally. So if we dip with no change in the game, we rally. So what's the change in the game? Him, Powell, saying something new. Like, we not only are going to taper, we're going to tighten rates too. That is new. That will cause a debacle. No way he's going to say that. But if he does, that is new. Okay, so something new that is not in the news right now could change the game. Right now, nothing is going to change the game except for sentiment, feelings. And that only lasts so much. Look at this sentiment. It was horrendous in September. We found the bottom and we bounced. So that's my thought about the overall perspective as to who's in charge of this stock chart. And that's all it is. It's a stock chart. This is fact. None of this is conjecture. None of this is opinion. It's fact. New all-time highs, QQQ. New all-time highs, DIA. New all-time highs. What is the one pivot that hasn't done that yet? The small caps. Small caps have been consolidating for almost a year. So if they take out the highs from last week, I don't think these will stand. And if that happens, we're going to here. So we will have an 8 to 13% rally if and only if we break out the small caps to confirm the other indices breakouts. That's it. So you tell me what the Zinger says. Let's see here. What's it say? All of the above.
Yep. These are only 98 people out of 190 though.
Well, that's okay. That's a good sample. So 50% think that everything is affecting. I challenge you, if you want to, here's the thing. Turn off all news this week. This is the most newsy week there is. Turn it off and see if you trade better or worse. The minute I started not listening to news, I became a much more objective investor. That is an absolute fact. I can say it about myself. I became less likely to get faked out. I was forced into, what is that? I was forced into doing my own homework. So how is that doing my own homework? Okay. Instead of listening to CNBC to tell me what Powell said, go listen to what Powell said and you figure it out. Because there's no opinion between Powell's words and your ears that is Steve Leisman. So he may tell you what he thinks. I want to know what Powell says. I don't want the filter in between. So educate yourself to do that on your own. I think you would do better. We're not idiots. The new investor has so many tools. I can go to the Fed website, find the jobs numbers laid out. So then you need to know, okay, what in the jobs number do I need to look? Unemployment is low. Participation is an important thing to see if people are falling out. And that's why unemployment is low. It means it's a fake low unemployment because people stopped looking because they don't count people who are not looking. So they make 300,000 phone calls. Are you looking for a job? Yes. Are you unemployed? Yes, that counts. Are you looking for a job? No. Are you unemployed? Yes, that doesn't count. So it's pretty weird. So do your own homework and stop listening to other people's opinions of what they think. Nobody knows what's going on. We have never had this situation before. The last blurb about it, what haven't we had? We haven't had 3 to 7, I don't know the number, somewhere in the middle, $1 trillion of money just poured into the economy. It is a lot of money. It is absolutely a lot of money. It's inconceivable amount of money. I said it the other day, I'm going to regurgitate myself. If you spend $1 million a day for 2,740 years, you will get to $1 trillion. We have had 5 of those. That is a lot of years. So we've never had this utopia where there's so much money in the economy. Businesses have never been more profitable. People have never been more spendy in the US. It's just unbelievable. So we don't know what's going to happen. It could all come crashing down from something we don't know yet. It's called the Black Swan event. Nobody plans on crashing their car, yet we crash our cars every day out in the world. We buy insurance just in case. Anyway, enough with that. Let's get to today's plan. What are we doing?
Right. So that was a really good overview, Nic, and tell us a little bit about what are you looking into for this coming week? How was the call? discussions in the call that you had with the
Okay, so
members in the
I'm
chat.
strictly concentrating on the small caps, these IWM, RUT, to confirm the breakout in the major indices. That's it. The breakout happened in the major indices. We are going into a binary event, 2 of them this week, 3 of them, and I want to see this confirm. If not, I will buy the dip to do it again. It's been going on for weeks. That's the plan. So as far as teaching people how to trade options well, let me start by the first lesson here. I'm going to back into it a little bit. The first lesson is I don't buy calls hoping it breaks out. I want to see the breakout to chase it. I would buy calls if I had a specific reason other than the breakout line. In other words, if it dips into support, I can say it's falling into support. I'm going to buy the calls because I anticipate support holding. This way, I will have a reason to get out. Why? If support doesn't hold, then I'm wrong, then I know to get out. Versus here, I'm buying the calls, hoping for a breakout. It's not a thesis. I thought it was going to break out. Well, why did you think that? There was no evidence. So either here, there's evidence of support, I can buy it. Here, there's potential breakout. I need evidence of the breakout to chase it. So this is the trader's mentality. So to be profitable with options, consistent, you have to be more surgical than with stocks, because if it was a stock and I'm buying the equity, I can withstand a couple of months of hurt if I was mistimed it a little bit. You can't do that with buying calls. They're on the clock right away. What's a breakout is when the stock takes off from a prior stage. Like here, you can see them stuck here, wherever that is. Breaking out, meaning just going higher and running, like here. Here, they were stuck in this zone, and then they broke out, and they overshot. So let's back up. And let me ask, put a 1 in the chat, just a 1, only if you have never done options, or you consider yourself, you need to know what a call is, what a put is. Don't give me 2s, just 1.
Oh, I ran a poll here, Nick.
Oh, you did? Okay, so what is it?
All right, so everybody finished voting on the poll here for the Zinger Options Experience Survey. We're about to close it out now.
That's good. That's good.
And
okay, we have a lot of 1s. That's all I need to see.
Okay. All right, look at the poll now.
So that's good. All right, so we have a lot of people who could benefit from what I'm going to say. So try to do something for me here. Shed all of your preconceived notions of Greeks in the options and what you think you know. Just really open your mind up to a new way of thinking. So I'm not a Wall Street guy. I'm an engineer who figured this stuff out on his own. I've been investing for decades, and then a long time ago, I discovered options when there were only a few of them. So I figured out that there are only a few things that we need to be absolutely hard line on, and the rest is just frou-frou. It won't pay the bills, so to speak. So let me share them. First things first, let me define what risk is. I'll give you a minute to picture yourself as teaching a class, and you want to explain what is risk. So give it a second. And if I ask you to put it down, actually I am, why don't you go ahead and tell me, explain to me what risk is. And I don't anticipate anybody getting everything correctly. What you're willing to lose. Excellent. Yes, that's absolutely correct. But that's not all. Comfort level. Okay, that fits. Okay, I like Aaron. Keep that in mind. Jackie, you're right about that. Exit level. Mark, you're Kurt. Boom. Stop. Percentage. I hope you said no. You know what? Continue going. Percentage of what? It's unclear. I'll give you half marks. Okay, I'll tell you what. First, the risk is 2 pieces for me. It's so important. Gain versus loss. Yeah. So first one, you all said it one way or another. How much am I going to lose if things go wrong? What's at risk? What's the consequence? Okay, that's number 1. Everybody got that right. And this is not the part I manage. This, the part I decide on and then take the trade, and I don't manage that. That's set. The part I manage is, what are my odds of success? So when I take a trade, I better know my odds that I assign to myself. So you do homework, you like Roku, you do homework, you say, you know what, I love it because blah, blah, blah. And I think I'm smarter than the people selling it because I did homework, they didn't, and I give myself an 80% chance. That's how it goes in people's minds. That's the number you manage, that percentage. Let's say things happen and Roku does a couple of things and you go, you know what, I was wrong about that. All right, so now I knock myself down a little bit. And then you see some things like, holy crap, no, I was completely wrong. So now you're managing the percent. That percent that you had confidence with reaches a level to say, you know what? No, I don't like it. Out. That's the part you manage, not this. This you decide and you set aside. Why do I mention this? In options, in options, it is so important to know this because time is so critical. Okay, we'll get to how that works out. But luckily for us, you're saying to yourself, oh, how do I give myself an 80% chance of success? Guess what? The options gives you that number. It absolutely just gives you a number, hands it to you. So let me go to the options table and check it out. So this is an example of an options table. This is E-Trade. I'm not recommending it. It's a practice account I have in there. It's as good as, they all have their bad days. How about that? So we're looking, not considering DWAC here. We'll go to Apple. It's always my go-to. Everybody's familiar with it. So you see there are two sides, a whole bunch of numbers. Let's start with what the hell are options? So they are contracts. And if there's a contract, there's usually a term limit. How long is the contract and what the price level is of that contract, correct? So in this case, I chose December. It has 47 days on the clock. This set of everything here has 47 days. I could have picked January. It would have had 82 days. So let's just focus on December. 47 days on the clock. This side here, it says puts. Everything here says puts. Everything here says calls. I'm orienting your eyes to the layout in case you're completely new. People think puts bearish, calls bullish. Incorrect. What you do with the put and the call determines if the position is a bearish or a bullish. Okay, so the contracts can be set at whatever level we want that's available. There's a contract at 145, contract at 140, 35, 30, 60, 165, 70. I can pick and choose anything here. So if it's a contract, then there is a buyer and a seller. So when you hear on CNBC, they say they are buying the $155 call in Apple. That is an incorrect statement or incomplete statement, because if somebody is buying this call that I just regurgitated, 155 call in Apple, that's it right there. It's a call and it's an Apple and it's at 155 and it's for December. There is a seller on the other end that doesn't come off the shelf. There's a buyer, there's a seller. So when they say they are buying, they mean the person on TV is interpreting the fact that the buyer is smarter than the seller. So that is what they're intimating, that they are buying this call. You too should buy it. You shouldn't. You should do your homework and see who's smarter, the buyer or the seller of the call, and see if you want to chase either or just wait it out, sit it out. Okay, so now we've established it's a contract that has a term limit, it has a price level, and it can be bought. I mean, when it's bought, it is also sold. There's always two sides of the argument. Yes, it is a transaction, Robert. I'm glad you said that. There are two sides of every transaction. There's a buyer, there's a seller. Keep that in mind. Why? It's a competition. If I'm buying this call, I'm essentially saying the seller is an idiot and vice versa. Time will tell who's right and who's wrong. Okay. All right. So let's go back, track, and define what's a put and what's a call. We just laid out the playground. Let's define what's the put. I'm going to define it in an easy example. So you can go out and read the definition from the Greek perspective. They love to be wordy. I'm not going to do that. I'm going to put it in plain, simple English in real world terms. So anyone can hear. Okay, so if I own 100 shares of Apple and I'm worried about them through the next 40 days for whatever reason, I'm going on vacation, I won't have time to babysit, I'm worried the market will crash, blah, blah, blah. I need insurance. I can go to this page and buy this thing. It's an put. It has 47 days. It's at 135. Why? It's there. I chose it. I could have chosen this one. I could have chosen that one. I could have chosen this one. I chose 135. Why? Because maybe I own the shares at 110 and I'm okay losing to 135, but below that, I just want to be out of the stock. Give it some leeway so I don't get stopped out of the stock fast. Okay. So I sell it. I buy it. I spend $100 to every contract is 100 shares, represents 100 shares. So I only need to buy one, and that covers me for 100 shares. So that guarantees me the right, if I want to, sell my shares at 135 in the next 47 days. I have a guarantee. Any point in time, I can lift the phone and say, broker, I own that put, please sell my shares at 135. Price does not have to be at 135, but I'd be an idiot if I do it here. So it's like having insurance on your car, and then you have a fender bender, and it's less than or at the actual deductible. Then you don't file the claim. So you own the right to file the claim, but you don't file the claim. Same. Okay. So I buy the put, cost me $100. I can go to space and come back. My stock is protected at 135. So if I want to, at any point in time, exit, somebody is on the hook. Who? The person that sells me the put today. So if I issue my position today and say, I bought it, that means somebody already collected the money from me. They took in $100. Why would they do that? Okay, so here's Apple. Let's say somebody on the other end said, oh man, Apple, it's just beautiful. I missed it. I wish I can get in it here. Well, guess what? I wish I can get in it here. So what did they do to me here? They promised they would buy my shares here, 135. They want to buy my shares here. So they collected my money to buy my shares at that price, maybe. So what happens if I don't say, okay, buy my shares? Nothing. They take my money. I forego my $100. They made money out of thin air. They didn't get their stock, but they still made $1. It's like they bought it at 149.80 and it went to 150.80 and they closed it. That's the same thing. So they made $1 out of thin air, $100 basically, because it's times 100. Because the buyer of the put, me, I paid $100. They collected $100. If I don't claim if I don't give them my shares, they made $100. All right. So this is a win-win situation. I went to sleep knowing my protection is in place. They went to sleep hoping they'd buy the shares. And if not, they got compensated for their effort. Not too bad. So that's a put. The put gives the buyer, the one in the green, the right, but not the obligation to sell the shares. The seller of the put is obligated. They don't have a choice. They wake up owning shares one day to buy shares at the level they promised. Period. End of story. Their break-even level, the seller, is 134 because they're collecting $1 for it. So if they get put the stock, if they get assigned the shares, if they wake up owning the shares because they said they would at 135, if the shares are above 134, they still haven't lost money. Okay, so that's how it works. That's the put side. All right, so this is what we do in the chat room all day. We discuss not this basic element unless somebody's real new. So if you jump into the chat room, for example, with me, you're new to options, you're likely going to have questions like these. Luckily, I have videos that I share in there. It's like a lesson every day available. All right, so let's give you a quick peek at the call side, and then we'll see how we can take it from there. What about the calls? So now we know that the puts are kind of like protection type. On the call side, it's the opposite. If I wanted to buy Apple shares, I would buy a call instead if I'm nervous, because buying 100 shares of Apple, it's 100 times 150, and that's a pile of money. What if I can lock my price for $500? And that's what it does. So if I buy a call, I'm locking myself in at this price that I chose. I could have bought this one. I could have bought that one. I bought this one. I buy it here. I pay $500. I'm locked in at 150. It means the seller of that call is responsible to deliver me shares if I ask them to. So buyer, me, I lock in my price, not the obligation. I don't have to own shares. I don't have to buy the shares. I just want the right. Hey, put me down for that much, but I'm ready to change my mind. I don't have to do it. The seller cannot change their mind unless they buy it back to close their position. The seller is obligated to deliver me, the buyer, the shares. So that's the call side. Okay, so we can discuss this a little bit further, but I wanted you to get comfortable with this. And the next step would be for me to tell you what the heck these are and what should I be looking for? What's a delta? What are Greeks and theta and vega and gamma? I'll clear it all up for us today, I promise. And I tell you which ones I play with for decades. So most of it.
Really quick here, Nic. Sorry, I need to jump in. A couple of people are asking about this chat room. Nic has a chat room where we're basically trading all day. That's where he just came from, the meeting. We have a session on Sundays, and we pretty much scheme about trades. We talk about strategies, sectors that we're looking at. Also, if you have any questions about your own trades, your feedback, if you want feedback on your trades or your strategy or anything as far as trading with the community inside Benzinga, that's the chat room that we're in pretty much. I'll post the link for you guys really quick, just so we can get back here to the education.
Okay, so options are contracts. There's a buyer and there's a seller. I'm kind of doing a quick recap. Put side is here, call side is here. Neither is bullish or bearish all the time. It depends what we do with them, and I'll tell you in a little bit how that works out. We just went through why would anybody buy a put? To protect shares. Do they need to own shares to buy a put? No. Some people use buying and selling puts to trade. So I can buy a put to, quote, short a stock. I'm not long the stock, so I don't need the protection. But if I think the stock is going to fall and I buy this put and the stock falls, the put appreciates in price. If you can see, the higher the put is, the more expensive it is. So if I buy at $1, then Apple has a conniption of sorts and it falls down to 135 or 130, that dollar value will increase. It'll be like this. So then all I have to do is sell my position, the put. I don't have to exercise shares or anything. I just sell the position at a higher price, hopefully $3, $4. So that's how people, quote, short stocks safely. Traditional shorting involves unlimited risk. I don't know if you know this, but when they say, George Soros is short Twitter or whatever, I'm just making stuff up. Then George Soros would borrow shares, take 100 shares from somebody, sell them, put the money in the bank. If he's right about it and Twitter falls at any point in time in the future, he returns the 100 shares. But in order to return the 100 shares, he has to buy them at the cheaper value, so he keeps the difference. But what happens if it was like GME, where if you did that with GME, you went bankrupt because you literally are losing for as long as the stock is rallying until you cover your short, and then you're buying in panic. And it's just it's a account ending event. Do not short stocks in this day and age. How do you short stocks? Like I just said, or by selling naked calls. Do not ever sell naked calls. You don't have my permission to do that. That is an irresponsible action, even for a second. I know people who know people that lost 10 million bucks on GME because before it all started, they just happened to be short one position in GME. $10 million account wiped. They were forcibly liquidated to cover their margin call. Done. One position. Good trader. Okay. All right. So avoid being short stocks. This buying a put is effectively shorting a company, but the maximum you could lose is the $100. So if you really want to short stock, just use buying puts or put spreads. That's the mild way. So we established all this fact now. So what about all these columns, Nic? What about theta? What about delta, gamma, vega? I'm going to tell you, it's in plain, simple English. What if deep out of the money calls? So I can see. So here's the pushback on me saying the GME. All right. So they're asking, what if it is the call that they sold way out and not a chance they get a sign? Really? Okay. So let's take that. I use specifically GME because you cannot deny that. You cannot. Okay. So it was in January, $18. What call could you have sold that kept you safe after a 2,700% run? Nobody short GME survived. I can guarantee you that. Nobody. Okay. You need a multi-billion-dollar account to take this pain and not be stopped out and liquidated. Don't ever sell a naked call, ever, in this environment. I'm just giving you my honest opinion. And you're saying, oh, it happened here. Yeah, well, let me show you who was the original super spike guy. Tilray. I remember trading Tilray from the bullish side, and this move was so violent that I couldn't even close my winning sold put position. That's how violent the move was. In one day, it went to $300. Check that right there. This was the original GME back in 2018. Yeah, 1,300% out of nowhere. I'll tell you in a little bit. So this is for somebody who's just pushing back on what I just said. It's not an exceptional case. I just gave you another example. You want another example? What is it? Nokia? What is Nokia? Nok? That? You survived that? Okay, so that's 3 examples. Yeah, it's just not for me. You can do it. I'm not giving you my permission to do it. Okay, what you're saying, selling a call for piddly crap. Why would you want this much pain for piddly crap premium? I mean, it just doesn't make sense. Sell a bear call spread. You would accomplish the same with limited risk. Okay. All right, so let's go back to the definitions. Dial me back. Namaste, Nick. All right, so here we go. Greeks. So you hear it on TV. They throw terms that sound fancy. Let me dumb it down. Theta is actually time. So know that whenever you buy a put, whenever you buy a call, time is extremely important because, and here's the one that I love, they say all the time, all else held equal. On what planet are everything else held equal while time ticks? No, but know the concept that if you buy something, puts, calls, shares, you need a move to profit. If you buy shares, you need a move to profit. The difference is the move can come now or 10 years from now. To you, the value is not going to matter much. Time is not that critical unless you're personally on the clock. Whereas if you buy a call waiting for you need a rally to win, just like buying shares, only you need it like ASAP before the time runs out. Otherwise, that $500 I paid goes away. Okay. So I need a move and I need it within a certain period of time. That's that quote theta element. So if I do this with this week's contract, I only have 5 days, way cheaper than $500. But guess what? Every minute counts. So now I lose faster than out here if the move doesn't come. Okay. Worse, if the thing drops, I lose way faster because there's no chance of recovery. And I'll show you an example in a little bit. So theta is time. Know that time is your element when you are buying options. So this is a good point to mention. If you've taken an options class before, you've probably heard in the first 5 minutes, which I haven't mentioned, most options expire worthless. First of all, I don't know that's true anymore, but because you do spreads, I mean, what's the stat? To me, most is like 80%. So what is the real stat? If I do a spread, I have one leg loses, one leg wins, I win overall. So is that in there? I don't know. So, but know that you need something to happen when you buy something. So to me, if I'm taking a class and the teacher says most options expire worthless, I'd say, okay, so where is the room where they teach how to sell options? And that's what I do. Because if time is the enemy, I want to be a friend of time. So if I sell smartly, then I would be in the right side of time. So when I put a position on the way I do it in the chat room and I share it with a full video and the full write-up in several different ways, I really need nothing to happen. If the stock rallies, I win. If it doesn't, I win. If it falls a little bit, I win. The only way to lose is if it falls a lot, then maybe I can stand chance to lose. And I'll show you examples. You'll see it, black and white. I'm not making the stuff up. It's right there, okay? So time is theta. That's the first Greek I usually address. What is the most important Greek, do you think, to me? Can anybody guess? Yes, Michael, you can. No, not to me. Delta, boom, 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 stop, delta. Phil. Look at that, everybody, delta, delta, delta. That's the only thing that matters, baby. Okay, so you remember this part, we decided, I established the maximum risk. By the way, if you're shorting a stock naked or selling a call naked, you don't know this part. That is an unknown. It's unlimited. Nobody should take an unlimited risk. Nobody. Okay, so when you sell a stock short or you sell a naked call, quote, out of the money, way out of the money, that is an unknown. That's not my style. I would never put my family's money in the face of a sold call. It's an irresponsible action. You can take offense to it, but it's a fact. Okay, so this part, I told you that the options chains give you the delta, the odds. Like when you do stocks, just regular equities, you have to make your own odds. Guess. You assign yourself, okay, 80%. With the options, that number is readily available. I can just read it off the screen. Check it out. So here it is, delta, and here it is, delta. These are for calls and these are for puts. So let's go to the call side. People think, here, let's go to this week. It's easy to explain that way. Let's say somebody thinks that Apple is going to 162 this week. Let's look at the delta. First of all, this is where your price is right now between these two. That's where the color changes. The delta is 0.5. Guess what that is? Anybody? It's a coin flip. It's 50-50, right? So when I see a delta of, yes, it's at the money, at a point, that's 50%, Michael. It's a coin flip. So I have equal chance for it to come up or come down. So if I'm looking to buy a call and I go all the way up to here, it's 162, look at the delta, like 2%. There's only a 2% chance, which is very low chance that Apple's going to go whoop this week. That's why this is 4 cents. 5 cents to buy that call. So in order to win, if I buy that call, I need Apple to rally through it fast in 5 days. Low chance, low delta, no bueno. That the buyer of this would make a ton of money if they hit it, but it's a lottery ticket. Okay, so it has very low odds, very high payout. So it's like you've got nothing going on but hope or insider information. If you know they're going to release an EV car this week, woof, then you better load up on that. You spend $50 and you make 10 grand. But if you don't know this, you've got nothing but hope, and the odds are with the seller. So the buyer of this only spends $5 to buy one contract, but they're not getting their money's worth because it's crap. There's no way, well, there is very little chance it's going to be there. Nevertheless, there are 14,000 contracts in here, 7,000 in here, 16,000 in here. So we'll talk about that in a second. So the delta, the higher the delta, the more like a regular stock it is. Look, all the way down here, at 142. What are the odds Apple is at 142 or higher in the next 5 days? Pretty good, right? Almost as good as owning shares. So it's almost one. So for it to be out of the money, this thing, for price to fall below this, you would need a freaking disaster that is less than 5% odds of this happening. Okay. Because one would be shares, 1-to-1. 0.95. So if the stock moves, the option moves almost equally. So that's actually the real definition. If you go to read the definition of delta, is by how much will the price of this call change if a change in $1 of the stock. Blech. Got dizzy? So how about just use it as your odds maker? I don't care what the wordings are. If I'm buying this call, it's like buying shares. I need a move to happen and I have no edge. It's 50-50. It can go up, it can go down. I have no edge. Okay. If I wanted to buy something, I would never buy anything lower than a 0.28, 0.27, 0.33 is a good place, which means I still have a realistic chance of price getting to me, but it's also somewhat of a lottery ticket. So it is a feel for my own taste. Other people like to buy in the money. Other people like to buy way out here. I like 0.3-ish plus or minus a few points. That's personally, if I'm buying, okay? So that is the delta on this side. What about this side? The delta on this side works the same way. The price of the put has at the money, current price right there at the money, has a 50-50 shot, same as the one on the call, because price can fall or price can rise. If I'm shorting the Apple stock by buying a put and I'm buying this put here, I have very little chance that Apple's going to be at 142 this week. It would really take the market makers are not expecting it. That's probably the best way of saying it. So it is, I would have much better chances of buying this put than this one. This one is about 35% chance. This is rough estimate. You know, nothing is hard coded, but at least if I use the same rough estimate method, which is in here, I don't have to calculate, I just have to read it. I'll be consistent. So if I try this one at 35 delta and it doesn't work for me, the next time I'll get higher or lower. I'll adjust it till I get one that works for me. For me, 0.33 to 0.28-ish works for me. So if I wanted to short Apple, I would buy this to short Apple. I wouldn't buy this. Although if I did and it went there, woo, just like this one, I would make a lot of money. But that is hope. This is strategy. This is hope. And here's the fun part. Okay, so I told you this is the part you manage, right? Okay, so let's go to it. Let's say I buy this and it has a 35% chance of hitting. And then price rallies. And this 0.34 drops to 0.14. Well, then I would revisit my how I manage my risk. It's like, man, when I took it, it was within 30% chance of success, and now it's down to 15. So I'm like that fool that is just hoping for a breakdown. I get out. I was wrong. I booked a loss. That's how you manage your risk. Not this part. This part you set smartly from the beginning. And this is the, should I stay or should I get out? That's the part you manage. Luckily, with options, that's super easy because it's a freaking number right off the paper. And same here. If I bought this call and it had 30% odds of success and then Apple falls, this 0.3 delta, I check it tomorrow and it's down to 0.15 or 0.1 or 0.06. It's like, oh, now we're like back to a lottery ticket. I better salvage whatever is left of it before it goes to zero. Okay, so how do we use that? We use that in the sense to, here, let me bring something in. So in the chat room, I'm sharing trades every day with videos and all of that. So all this happens in the chat room. And trust me, it's pretty busy. But I managed to send it out in video with a table, trying to find places where people are making mistakes. Look, my delta number is brought into the table, and that's my driving factor. So when I'm selling a delta, I sell a low delta. And when I'm buying something, I buy a higher delta. So this one has a 0.3 delta. I bought it. I would have bought it. This one has a low delta. I would have sold it because this one, the odds are in my favor. This one, the odds are in my favor. So you have to know what to do. And that's what we concentrate on in the chat room. conversation for later. So but I just wanted to show you how one uses the chat room setting to get better. So these people should not be in here because there's nothing going on Sunday, but here they are. So, oh, look, this person overslept. We'll tell him, no worries. Video above. So they wanted to do, they wanted to be in the, not the strategy video. This video has 85 tickers or 82 tickers review. I pasted all the charts that are in there with details for, this is one of them. Yeah, it's not going to fit in the window, so let's not bother with it. Anyway, and I ran out of time because I'm coming to do this. I was going to try to put all of them in here. But anyway, so.
You said, did you say 82 tickers?
Yes, 82 tickers, and that's on the low side. Last week it was over 104. So they get, those are these are the tickers. Every week we get this done on Sundays.
And they all have like pretty much your notes, the lines, everything that you go over in the videos.
Everything is in there. Notes, lines, action levels. Let me see here. So let's pick a ticker. Amazon. So Amazon, let's go to 120 and let's show my lines. So let's see here, 240. I'm trying to show a time frame that would give direction. So Amazon, my comments have been, it's stuck in a wide range like the small caps and then a bigger range on top of it. So it depends on the speed. I said sticky zone for weeks and I keep extending it. They're still there. They're trying to break out. They go above, they go below. So I said, if it falls into here, that's a buy the dip opportunity to swing it back up to here. That's a exit opportunity. But if you take out this one, it's going to here and then here maybe, and then repeat the performance up there. So it's one line at a time. So they have action like buy the dip or buy the rip. So I buy the dip to swing it back up or chase the breakout. Or if it goes below here, I should get out. But that scenario only happens if the market in general happens to trip. So Apple last week gave us what it wants to do. It wants to be between this line and that line. So that's your box for this week. Right there, it's in the middle. I don't get long Apple here. I get long Apple here or higher. I don't get short Apple here. I get short Apple here or lower. I get long Apple into this bounce and try to get out in here until the range breaches. So the idea is that we want to be on the right side of timing. I do charts super, how do I say it without sounding like a condescending moron? So I've taught myself how to read charts the Main Street way, and I challenge the best chartists out there to read them better than me with literally no tools on there. I have one tool on there. Everything else is drawn by hand. And my number one tool is, can you guess? Nope. Good guess, but nope. Nope. Yeah, okay. Maria is on the right one. Lucy's on the right one. But how do I determine that? I'll tell you what my best tool is. Eyeballs. Eyeballs. Reddit. No way. Eyeballs. Not MACD. No. I look left. I just look left. So if I'm long Apple here, I look left and say, what happened the last time Apple was here, to find the levels. So this was an anomaly. So now this places a trigger for me. Apple will face a lot of selling into it. But if they can overcome it, they're going to shoot to 158. Okay. So if Apple gets here and I'm not long, I don't take a long. I take a long when they show me they can get above it. Okay, so that helps with the timing. I bet you everyone in here, and I'm going to say everyone in here, has rarely picked the wrong stock, right? You just say, gosh, dang it, I was so close. I was too soon, like an hour too soon, or a day too soon, or I was just a little bit late getting out. That's our problem. So you combine options expertise with strong technical skills and the benefit of hundreds of people in the room, eyeballs on all of their watch list and all of their alerts and all of their methods. Some people like MACD, some people like VWAP, some people like Fibonacci. They're all in there contributing. I listen to all of them. I only use eyeballs and only one tool. You can see it here. Somebody's asking me, what is this? This is the volume profile. So yes, you guys were correct, and gals. Volume is super important because what do they say? Price is truth, right? So let's explain these bars a little bit. We'll go back to options. Right. And here's what they're saying, that tools, that's a perfect statement, but let me rephrase it. So Hedwig said, tools are good if people use them, right? So notice I only have one tool on there. That's it, this one. I know it says 13 here, but I don't use them. Okay, this one here is just a visual regression analysis. I don't use it. I don't say like, oh, blue, I have to sell. Oh, blue, I have to sell or buy. In the middle, nothing. It just usually says extremes are wrong. Somewhere in the middle lies the truth. That's a visual representation of it. But what this is, these are volume bars down here. They tell me when the action has happened. It's almost useless to me. In fact, it is useless to me. What's more important is if you could tell me instead of when, where. So this is what that does. It tells me that at 150, that's where in the last year, that's the most action that's happened, which is pretty amazing, which means that this whole battle is hinging on what happens at 150. If they can clear it with conviction, they have runway, and then they can tackle the failure at 156. So if the IWM breaks out, there's a good chance Apple can get to like 165 in the next 3 weeks. But it's a big if. I don't buy Apple now based on that. I'm just laying the picture, how we look at the macro, micro, and all the opportunities that may or may not come.
Nick, really quick here. Someone's asking about Doge. I don't know if you cover specifically Doge, but I do know that you cover Ethereum and Bitcoin in the chat room as well.
I just had a whole conversation sidebar about which platforms to use and all of that. I am not a crypto expert, but they are charts, and I've so far been successful with them. So I did say Ethereum when it was in the low 1000s and it went to 4000s right away, or within the next 10 days to 3 weeks, but that was a while back. And then I said, I want to say 3 weeks ago, I'm interested in Solana because of actual use case and not just fun. I have traded Doge successfully. I buy it under 20. So 18 is where I buy it and I sell it 30% higher. I've been consistent. I leave money on the table. Like I didn't catch the 30-cent tops, but I think I sold it at 29 cents last time. I would rebuy it if it hits 18. So this is Solana. It actually has a use case. I think it's the competition to Ethereum. I'm getting myself to learn the fundamentals more as to exactly what this means and that means, but it's a chart. So here, I have my alerts on Solana. If I bought it at 144 here, and I sold it at 190 something. So I didn't catch the top, but I here somewhere. So I didn't catch the top, but I made 32%. And that was my rule. If I get to 30%, I exit. XRP, I believe, is in litigation, so I can't buy it on my platform. But it would be good, but know that it's a gamble. You don't know how it's going to play out, the legal thing. Doge, I don't think it has a use case. So the ones I would chase for fundamentally would be Ethereum, perhaps Cardano, because it's the same people that started Ethereum, I hear, and Solana. Okay, so those are the three that I would chase on a fundamental basis. And I'll just learn about a new one that I'm going to do research on, and then I'll share it if I believe what the person said. I wouldn't do Shiba Inu, but hey, you made a lot of money. My fighting coach. So Saturday, I went to my sparring session in the morning, and he was there, and he said, "Oh, you do crypto?" Because he knows what I do. And I said, "Well, I'm not an expert at the crypto technology, but I can definitely steer you right with the charts. What do you got?" He goes, "I had $200 in Shiba that I forgot about. and now it's 3,200. I was like, book it. So he booked it. I said, if you really want it, keep the 200, keep it in there. If you think it's going to go to whatever. I said, I don't know what it does, because I don't know if it has an actual use case, the Shiba Inu. I know of the other ones. So you do your own homework. Okay. So let's not get too bogged down with charts yet. We'll do charts in a little bit, but for now, I wanted to address the questions that came up and trying to tie how the chat room will get you to be a better trader. I promise you that there's so much value in there, and that you will be a better trader, whether because of me teaching stuff or because of you talking about stuff with us. So there is going to be golden nuggets in there that will be game changers going forward, even if it's technical. I have a pretty solid knowledge of the charts, and I specifically state them every day in the chat room multiple times. If you read, if you hear the comments, if you hear the comments over and over and over again, if you watch one video per day, which is what you're going to get in there, at least 4 a week, one video per day, about how to trade something from start to finish. Every video I share has a macro, what's the world look like? The micro, what's the stock look like fundamentally, financials and all of that. The thesis, why am I doing this today? And what would get me out, levels, the percentage, and what's my conviction level? And then I share ways of trading. The first way is buying shares, and then I share 4 other ways, which is that spreadsheet that I showed you. So the spreadsheet will show, let's say, okay, so Texas last week, if you were in the room, you made bank because we bought the Texas Instrument dip. And if somebody, so I share 4 ways of doing it. One, debit call. Somebody wants to buy a one call, just one leg. Somebody that wants to buy a call spread, cheaper entry, less aggressive. Somebody that wants to sell a put to buy shares. Somebody that wants to sell a put spread, less aggressive than selling put. So here's what happened. If you bought a call, you made $200. If you bought a call spread per contract, if you bought a call spread, you made about $100 per contract. If you sold a put, you collected $1.32, and now it's only worth 90 cents. So you're making money, 40 cents out of 132. If you sold the put spreads, you're profitable also because you collected 62 and now you have 40. So if you did 10, you collected 620 and now it's only worth 400. So you're making 200-ish. I'm rounding in money. So what about Teledoc? If you bought it for $5, you're up $2, and that is off the high. You made $1 here. So 4 different ways and I tell you, faster setup, tight stop, slower spread setup, selling naked put only if you can own shares, moderate long, credit put spread.
Yeah, I just want to give a shout out here to Deborah, Joe, and Tim for joining the chat room right now, guys. Welcome to the family, guys.
Yes, can't wait. There we go, baby. So these are my jam, so to speak. I love these because I'm busy throughout the day. I can do my homework. I'll say, you know what, I'm going to try to win. And this one, I really need nothing to happen. It should be a boring setup with an 85 at least theoretical odds of success. Okay, and they play out. The theoretical odds of success play out. And if you buy a call like this one is up $200. If you hang on to it and don't trim profits, you may end up with nothing. So if you look back, a lot of the calls get depleted. So I'm trying to find one that did. Okay, so this one, Uber was a good catch. It delivered profits, but if they don't stop out at a certain level, it could be a loser trade. But if they did credit put spreads, then they're still okay with it. So that's the concept. Here's Amgen from 1014. It was up, but now it's down. So if they didn't book the 17% win, you don't just sit there. I'm just trying to go through like a bad one. Okay, here's Apple played out well. This one, okay, so PayPal, I took the trade, it popped, I booked mine, it was up 30%. You will rarely catch me writing something above 30%. Okay, if I get 10, 15% quick, I'm out. Because in the long term, it plays out way better. Now, if somebody sold a put, it's still even Steven, even though they were up a little bit before. If somebody sold a put spread, they're down because of how the stock collapsed, but they may not be out. And I'll explain that in how many options trade do I make per day? I share one a day. No, my goal is not day trading. I promise you. Some trades come out, deliver profits right away, but I want to place a trade for at least 5 weeks to 2 months. I don't want to go through earnings. I usually avoid the earnings mess. And I want to take a trade that's boring, that's out of the, not in the highlight, not in the news.
Because of the consistency approach, the
Yes.
higher rate of returns.
I'll show you. Okay, so let's jump in. We're talking about it. Let's go. Look at me. Let's go. So here are practice trades that I took live in one session or another. Let's go to a losing one, Beyond Meat. So Beyond Meat, this is a bullish trade, a debit call spread. It needed a rally to win. Okay. It needed a rally to win. It cost $345 to get into at the time. The promise was it could double if we got the move through 120. Guess what? Beyond Meat fell apart. So now whoever paid $345 is down. They lost half their money. I'm rounding. 176 down per contract. I did one just to illustrate the point. This is a practice platform. So if I bought it, time went by, the move didn't come, the stock price dropped, I lost money. Okay. Let's take the same scenario of something that had 2 elements. Okay. Zoom. Perfect. Let's go down to here to the last one. Okay. At the drop, when Zoom reported earnings, they reported good, strong quarter, but guess what? Oh my gosh, they missed estimate. Nobody thinks that maybe the estimates were wrong because the growth rate was still incredible. There was nothing wrong with the quarter. I said, I'm getting long Zoom. Under pressure, I sold a put, collected $700 for one put. I said to somebody out there, I will buy your shares at 230. I forgot where it was at. So it was like a 20% buffer from current price at the time. So for that, they paid me $700 for one contract. Now it's only worth $4. So I made $300 out of thin air. To open this trade, no money leaves my account. It will require a good size account because it's a high dollar stock, but I could have accomplished the same thing with this one, a sold put spread. I collected $100, not 700, 100, because that works in a smaller account. I only need $900 worth of money in there to make that trade work. So now that is only worth 20 cents. So that made $80 out of nothing. So if I did that 10 times, I made $800, no money out of pocket. These two trades, Zoom didn't rocket, just stopped falling. So I needed nothing to happen. At the same time, I bought this debit call spread that required a move up to win, right? Was $400. Same stock, same day. Now it's cheaper, means I lost money. So somebody that caught the falling knife of Zoom by buying something, shares, calls, call spreads, lost money. Somebody that did the same day using sold puts or sold put spreads, like what I like to do, made money and didn't even have to worry about it. So this is why selling is the easier way to make money than buying, if and only if you do it correctly. And that's my goal. These are the trades I like. 3 weeks to 5 weeks, 6 weeks on the clock. Good, clear levels, good quality companies, bad headlines, and morons on the other side of the trade. Like, who bought this put from me? Now, what did they expect? A company like quintupled their top line. What were they expecting? So I did my homework. They were willing to buy a put down there 1 week. Let's go. Let me see if I can show you that. And that's the, oh, sorry about that. So 230. I'm trying to put a picture as to where my risk is. These are the boxes I shared with the trade. So this is where my trade would have broken even down here. The sold put. Somebody thought it was going way lower than that. So let's go to a weekly chart and turn off all the lines. So somebody thought that Zoom was going to here, and that I was okay owning it. Why? Look left. The base for the whole rally. I was like, okay, so worst case scenario for me, owning shares here, done. Thank you. And if this fails and they sell it down again, I will resell another one lower. See my alerts? The alerts are, hey, pay attention. That might be a good solid support. Right. So I don't let trades sit on the vine. So I am a person that would pay the 400 to close it. Depends on my portfolio. So I got a good win. The market is at all-time highs. Why don't I dial it back? Why don't I book some profits, redeploy it somewhere else? I won this fight. So that's my logic. Meanwhile, the person who bought, is it in here? The person who bought, who did one of these top two things instead of the lower two things, then they're in the wrong. So,
and this is something you do pretty much screening trades when you're given, in the chat room, going over trades and all this pretty much on a daily basis.
Most of the trades come from the discussions in the chat room. So you tell me about a stock. If I like it and it's tradable, we'll trade it. This was an effort to short the financials. It's underwater. It has 12 and 19 days still to go, and it could still happen. So small loss for a shorting the financials. I'm not an actively shorting guy. If you tell me, but every once in a while I'll put it out there. Here's a straddle. Somebody was asking about a straddle for Netflix on the earnings. I said, why would you want to buy a straddle on the earnings? Your opponent is the market maker who is way better than you and me. So I offered them a position that does a weird thing, like selling the short-term straddle, buying the long-term straddle. And if they did that, oh man, did they make money. So I didn't do it. I just did it in here just to illustrate the point. Right. But they came to me, and if they didn't come to me, they would have lost a lot of money.
Okay? And that's the issue there, where let's say, like, if you, as a new options trader, the biggest mistake you can do is trade alone. That's the biggest one.
So being in a chat room makes you more accountable to yourself. I can forgive myself for mistakes way easier than I can if I had a room of people in it. Like if I do something stupid all by myself, I was like, it happens. But if I do it and there's a whole room full of people, I was like, I'm embarrassed. So I don't want to tell everybody not to trade alone, but I guarantee you that if you stop trading alone and get into a group setting, find friends if you can't get into it, but make sure they're good. Like everybody in the chat room, either they're to learn or has something to contribute. There are no jerks in there. I promise you that they help each other out. Like if somebody comes in, yeah, you missed this. He mentioned earlier, let me bring it to you. So this is my strategy video for next week. 9 minutes of what to do and what not to do coming this week, what to look for.
And the Sunday session you posted there on the chat?
Yes, right below it.
Okay.
So nice. Those are 2 videos from today. And here is somebody that answered somebody else's question. Somebody in the chat room said that Lucid actually delivered cars. And I was like, I need the headline. And they delivered it. So it's a collaboration. We will be more successful together, I promise. So here's another example. Ring was falling off a cliff, right? And then I said, okay, I'm catching the falling knife. Let me see where my lines are. I shouldn't have too many lines.
Oh, yeah, I took that trade with you.
Okay. So I've done this a couple of times, and this one should have gone this way, and it didn't. But then I said, if we lose this, stop out. This is where it's going. And it came to here. And then, look, stop out 1, stop out 2. And then it came up to fruition. So here's the trade that if somebody took it, where is it? Okay. I don't know what date that was taken. I wish I'd known. So I sold the put under duress. So the stock was falling. I said, instead of buying calls, I'll sell a put. I collected $265. Now it's only $90 to close. Guess what? I will buy it back. So if I wanted to close it, I'll say close, and it'll just buy. That's it. I'm buying to close. If I say this, it'll say buy to close. It's the weekend. Where's it? Spend, buy, limit to close. That's what I'm looking for. Double check it. Okay. I read the final statement because I've made the mistake. I promise you, I've made a mistake where I go to sell something and I buy it, or vice versa. So make sure to read it. And what happens? I pay $90 to take the bet off. So I leave $90 on the table. Why would I want to do that? I do not want to risk a headline. Okay. This is where I know somebody in there saying, oh, shoot, I think they're going to deliver great earnings, so I'm going to stay long. Don't ever do that. You have no clue how the stock will move the next day, not even the CEO. What is my profit on those screens? What are you talking about? I don't understand the question. Okay, so every trade I share delivers profits on the sold put spreads or puts. So I'm very confident that when I set a trade by selling a put or selling a put spread, meaning the two options where I collect money to open the trades, like this one, like these, not these, this one and this one, where I'm selling stuff, the minus is sold. I do those with a designed 85% chance of success or better, and that is the actual rate of success that translates. I'm trying to think. I've had 2 or 3. Oh, perfect. 2 or 3 blowups in the whole year or two. So let me show you one that blew up, and let's evaluate the size of the blow up. Hold on. I know we have one. Something with $22. This one. Okay, perfect. All right, check it out. This is a lesson on what a put is and how it works. Hold on. Bear with me. On whatever day, GRWG, which I believe is a pot company, I thought it was a good idea to sell a put to get long the stock. And then the stock collapsed, right? So I would have stopped out a long time ago. But I don't manage the profits here because I do it for illustration purposes. And sometimes I like to let it go in the wrong so I can prove a point. At the same day, I also shared, okay, somebody that doesn't want to do that, they want to buy the upside rebound, they could have bought a call for $500. Well, that call is completely dead. Now it's worth $34. So that trade's dead. Okay. So what about this trade? You're saying, oh shit, that trade is getting down 130%. Yeah, it's down a lot, but let's see what really that means. Okay. So this is GRWG. So let's put a picture to it. GRWG. All right. First of all, I had stop out levels, and the put I sold was 22.5. I'm going to walk you through it. This will be a good lesson. 22.5. That's the put I sold. Well, now price is here. And now that put is $4. It's a little less. I'm going to round. And I collected $2. Actually, no, I'm going to use actual numbers. We have them. So forget those two things. All right. So let's go to the actual numbers. I collected $1.50 to open, and now it's $3.60. Okay. So let's go to the picture. Picture. 22.50 is the put. So I basically, when I sold the put, I told somebody I would buy their shares at 22.50. They haven't given them to me yet. They haven't assigned me the shares. I haven't been put the stock. All these mean the same thing. Price is now here. My break-even point from this one is 22.50 minus $1.50 because that's what I collected. So $21 is where I break even. So if Monday I wake up and they gave me the shares, like they said, like I promised I would buy them at 22.50, I didn't lose anything. What? Yep. Because if they give me shares, the position that I sold, this position that shows $400 loss will disappear. In place, this money will go away. The loss will go away. What stays? The money I collected, this $300 stays in my account. And then in replacement of this trade, I will have shares. That happened in this one. So now I have shares. So this was a sold put that went in the money and I didn't defend it and I have shares. That's what would happen here. So this loss will go away. I'll keep the $300 and then I own shares at current price. So I made $300. If Monday they give me the shares, I would sell them and I would have made $300. So this is the worst case scenario of a sold put that goes badly versus the bought calls that go badly. You can't recover. You lost $500. That's it, period. End of story. You can't maneuver that out of there. You can't do anything to it. Same stock, same day. Bought calls, lost my shirt. Sold puts, lost my shirt on paper, but still no damage out of pocket. In this case, if I know the company, and I never sell a naked put unless I know the company, I would say, give me those shares. I'll take them. Forget those losses. I'm not buying this buy. So if I go to close this to save it, I would have to take the loss because I have to buy it at the higher price that it currently is at right here. It now costs me $700 because it's 2 contracts. It's going to cost me $360 per contract when I only collected $1.50. So I lost basically, I lost double. So I wouldn't do that. I would say, you know what? At $20, let me look at the stock. If it holds this, I'm okay owning it and losing $1.50 from 20. So same difference. That's the scenario of the worst case scenario is not that bad, not as bad as the calls. Somebody that bought the calls wiped out. Okay, so that is a real life example of why is it easier to sell and make a profit from selling stuff. And that's why it's not sexy because you're not going to be making 10,000%. The most money I could make on this trade is that $700 I collect or the $300 I collected. But when I did it, I had an 85% chance of success. So if any day you can tell me I can get 15 to 30% in yield on money on reward on my risk with 85% certainty, I'll do it all day. Oh, and by the way, in the chat room, every week I share 8 to 10 iron condors, weekly iron condors. Not my jam, but a lot of people love them and they rarely break apart. 2 weeks ago, we had the credit call side spread get under fire. But last week they worked out. The week before that, and the week before that, and the week before that, and the week before that, they all worked out. They're not for everybody, but they do play out. They pay well, they pay fast, but you have to have a stomach for them. So a whole lot goes on in the chat room, I promise. And whatever sticker price there is to get into the chat room, somebody earlier said, I want to learn how to trade options like a pro. And I said, this is the doorway. I'm trying to get you in through the door. And I promise you won't be disappointed. In fact, if you are disappointed, I believe Benzinga will give you your money back within X period of time.
Yes, the chat room has a 7-day money back guarantee. So if you do want to go try it, join the sessions on Sunday. Also, we are including a complimentary laptop until midnight for the first 10 people that join. And the discount that you get, 78% off. It is basically a lifetime discount. So as you renew and continue to trade with Nic, you are going to keep that discount regardless of the price.
So as far as the price is concerned, I said that the other day and I really meant it, but I don't mean it as an insult or I'm like hurt about it. I'm lucky to be able to do this. And it does not represent the value that is in it. I mean, if you're saying if you're saying that's all you're worth, $1,200, I'd be in tears because one trade, if you took Teladoc, you probably made more than that. Okay. So there's definitely just from like earning while you're learning type of a deal, but the aha moments, you will have many in there. I've had 3 or 4 aha moments that changed my life in trading. Hopefully I can convey them to you. Every video I offer aha moments, the same ones. You just have to listen. And if you see the video 3 times a week, 4 times a week, regurgitated the same way, the same method, macro, micro, thesis, stop out, chart review, how to get long, why choose this one versus that one, how to avoid earnings, same freaking thing all the time. Okay. So how about we jump into charts? I know there were some people interested up there. And this, by the way, the chart thing, it seems like it's an interesting point for you right now because you're oh my God, my son started this car. I hope you can't hear it. So
I thought it was a storm coming. I
no,
started
he
looking the
just
window.
bought a, never mind. He's a gearhead and he builds trucks for a living, race trucks. And he just sold all of his trucks to buy this 2010 freaking race car Corvette that's been blown up to out of proportion. Anyway, so the biggest interest here that I get from you in these presentations is, what about this stock? What about that stock? I forgot what stock somebody was trying to keep popping in saying, what about this one? What about that one? That happens all day. I answer hundreds of charts a day. No, that's not a joke. That's not an exaggeration. I didn't count. Look, somebody here is, okay, so let's talk.
That's a direct message, right? Like a message between you and them, not in the chat, in the chat room, but between you and him.
Right. It is in the chat, but they hit me directly. So sorry
nice.
that we outed them out there, but there's nothing like financial about it. It's like, oh yeah, nice picture. No, I'm just kidding.
And I see there was this one guy that we went over it on the last session we did, that basically he was trying to take a trade and you told him otherwise, and basically he ended up just thanking you there for.
Oh, this one right there.
That's the one.
That's the one. So let's see here. They popped in. This is their chart here. They posted their chart. Archie posted his chart, and he said he's going to short this company or the SPX based on this potential head and shoulders. So I said, don't forget NT, which is for me is there is no trigger and no trade. So I said, here's your chart with my marks. I added these lime green thing. I said, I wouldn't short it unless it actually triggers below this. Then you can short it down to here. And then later in the day, they said, thank God I listened to you because the market closed up. So they said, they thanked me for it. And they said, thank goodness they listened. So this happens all day, every day. And there literally are hundreds of charts that are based on what you want to hear about. And then when I see some things, I pop them in. So here's Teledoc. I shared it on the fly. She was leery about this whole process, but then she was convinced within the first few days that we do our best to actually deliver good results and educate people.
Yeah, and it's not just about making money like in stocks. It's more about also not losing your money with bad trades.
So that's the thing. That's the thing is that I said earlier, I don't know if you guys caught it, that most of the mistakes we have are not that we picked the wrong thing. We just picked the wrong time. So this was a short-term intraday breakout that paid big time on Friday last minute. So I said, this is the 5-minute chart for the fast hands. We have fast hands in there, and I help these last minute things pay big time, 50-cent bet that turns into $5. So
yeah,
not everybody.
Jigglypuff on YouTube says, I paid it off with 2 trades and got a computer to boot.
Totally there you go.
Jigglypuff, shout out Jiggly.
So yeah, so I share, this is the Iron Condor video. Look at all these Iron Condor setups. And then I made a mistake with one while I was filming. I said, ignore this. So I sent out a new table. It's at real and as legit an effort. TLT, I shared my trade. I said, I'm out. I would look to engage higher on the TLT, and that's still an ongoing wait. I'm waiting on that. So the QQQ, I said buyers here, and that worked out well on the breakout last minute.
Yeah, and has been it's been great for the chart. I remember when you were talking about Tesla in the 500 range. I took the calls. So I've made that trade profitably twice with your notes.
So Tesla, anytime it dips like this, I sell puts and put spreads. It's easy. The breakout was here to 790, and then another breakout set up here. I said the catalyst is to 835. You can't see it, but it's there because it's a lower time frame. And then it did this. And then we went long into the earnings, which I rarely do, but it was 60-cent bet, 60 cents that paid So if you risked $60, you made $900 per contract more. And if you bought the call naked, which I wouldn't do, you paid off your car in a half. So it all depends on, see, Catalyst to 835, and they overdid it. And now they're still trying to short it. This is where I say this chart right there, it's a TH. It's too high to chase and too hot to short. Do not short Tesla. And if you do want to short it, we can talk how to short it very safely. So you tell me who sold the call short on Tesla that survived? Nobody. What's a naked call? Michael, you asked a couple of times. If it's not you, somebody else did. Okay, let me go. So trading. Each one of these is called a leg. If I do this, that's one leg. Okay. If I do that, that's one leg. If I buy this one, I'm buying one leg. If I buy one and I sell one, I'm buying a spread. This can be whichever one. So I buy one, I sell one. Now that's called a spread on one order. It's cheaper. Now, when I say naked call, it means it's just one leg. Buying a naked call. Shorting a naked call, which you should never do. This is not allowed in my house. Okay, that's the shorting part that we discussed earlier. You do this, you're at your loss profile. Remember, how do you find risk? Is unlimited. You do not know how much you can lose. You're losing for as long as the stock is rallying and you don't cover your short. And by the way, you say, oh, I'll jump in and cover the short. If it's a hard to borrow stock, good luck, my friend. So I would never let anybody in my family do this, ever. The risk is unlimited and the reward is 70 cents. Nope, thank you. That is just an absolutely crazy way to try to make money. If you want to short it with a call spread. So sell this, short it, but buy protection. Say, if it goes to 1 million, I know I can only lose X. That is a viable short idea like this.
What are some good falling knives that you've been able to catch recently? I know you had a ton in the past couple of weeks.
There is a lot hidden gems. PayPal, Visa, MasterCard, all falling on the same thing. I don't know Square. I haven't looked at it. Not Square. So PayPal, Visa, MasterCard have fallen into support levels. Disney, you have to stop out fast. This is support, but if they lose it, they're going to try to get to 160-ish. And if see all these orange dot lines, those are my potential buy to dip zones. Like here, if it gets to here, I will put a note to myself, to my future Nick self, buy it, you dummy. So just so if I'm scared on that day, old Nick will come tell future Nick to get some cojones and buy it. So let's see, trying to think who else. Amazon fell and immediately recovered. Facebook fell and immediately recovered, which we traded. I closed my Facebook long. No, I'm not going to call it Meta yet. Wait, Z. So look at it. Okay, let's talk technicals. A stock runs into this level, fails, and spends 2 months consolidating. It runs into the level again, fights over it for 3 weeks, and blows out to the moon. Comes back to revisit the post from where its state broke out. That's support. So here is a buyable dip in Facebook. What you don't want is them come back to here and lose that point. Then you just repeat the process down here. This is a buyable dip for shizzle. Okay, so that is 2 charts. Safest way to get long Tesla. Bad days, on bad days, selling a put spread. Tesla up here, if you're not long, you missed the easy work. If the stock market continues rallying, this could rally, but to get long any EV company right now, if you force me, I'll probably do NIO right now because it's still like, anyway, I wouldn't touch Lucid. I wouldn't touch any of those other ones. I want one with an actual P&L. This company, I think, will be up to $60,000 cars a year in the next few months. Lucid at maximum capacity is 34,000. Maximum capacity. If they pump up all the cars, they would still be half of NIO. And then now they still talk about it killing Tesla. They're not even in the same universe. Tesla can be killed, can be affected by Volkswagen volume, not by Lucid, in my opinion. the big three and Neo, and at least this one has a tangible P&L. With Lucid, it's cool car, cool tech. Kudos to all the team. They're doing great work. The cars are beautiful, but they are for the top 1%. The cheapest one is over 90,000 out the door.
Yeah,
and the one they built, the one they delivered in the headline, is the most expensive one. The Dream, I think it's called, whatever it's called. It's the one that costs like 170,000, something like that, 150 to 170,000. And they've been sold out of this, meaning they're not taking order. They have 500 of those to deliver. And then after that, they still haven't delivered anything else. But everything else is over 90,000. That's why I'm trying to say that Lucid's a great car. Just don't fall in love with the stock thinking it's going to be a Neo grower or a Tesla. They don't have the same setup yet. So get evidence, see what the P&L pans out to be, and then invest in it that way. How do I know when to take profits? Okay, Jackie, I take profits early. I don't mind seeing a stock run without me. Okay, so that I think Russell is asking the red blue lines. Russell is super easy. So with TradingView, this is, you go to indicator and you go regression. It's called linear regression. That's it. I take the bottled up linear regression and I change one thing on it for my own taste. I make this one 200 from 100. Just if I do it 100, I don't get what I want. I like 200. And I don't use it to trade. It's a visual representation of what's going on. Okay. So just tells me, all right, and if you change it, you can say a different story. So if you make this 50, you can tell a different story. Oh, it's flat. So 200 seems like a good fair number to me. And I've changed it in the past. Depends on what kind of a time frame I do. So this is literally when they say reverted to the mean. They overshot higher, they overshot lower, and somewhere in the middle lies the truth. That's what that says. No problem. So again, my setups here, I only have this one, the volume profile. And the volume profile is called VPVR in TradingView. It's not free, but Thinkorswim has it for free, and other people offer it for free. So the indicator here, if you do have a paid version of TradingView, is VPVR.
Basically, you send them this already with the work already done in the chat room.
Yeah, and in your chat room, you have all my tools. I also have a tool that does sentiment, and it helps too. So whatever tools I have, I will share whatever they spit out. Plus, Benzinga has some pretty cool tools too. I like the way they do news because it's less righty, more facty. You know what I mean? So I don't mind the headlines. I just don't want the garbage that goes with the headlines. Give me the numbers and let me make my own decision. Like the headline would say, Lucid delivers its first car, meaning the assumption is, the insinuation is that they're starting to deliver cars. No, they're delivering the 500 that they sold out in concept years ago. If you're waiting for the mainstream model, they're still not until next year. So dash lines, light gray. These? Okay. This is a part of the volume profile. Those are, okay, quick lesson on volume profile. And what it is, it basically tries to tell you this information at levels. Okay, so this is time. These volume profiles, those bars that you see red and blue, it doesn't matter. I mean, yellow and blue. They tell me what levels. So this is 1 year's worth of data. So it says for this 1 year, the bulk of the action happened at these highlighted area. So this white line kind of shows me that highlighted area. They call it the developing value area. Value area is that highlighted area. Like most of the action is here. Very little action up here. Like all of this had low volume. See that? So it went up and didn't have time to consolidate and just came back into the value area. They went up and didn't have time to consolidate and failed. By the way, look left. So that's a place to know that they expect a lot. If this gets to 54 and you're not long, don't start at 54. wait for the dip. I did that to Palantir, which I love at 29. People, oh, Palantir 29, should we load up? Nope. This is where you close your longs if you have them, and you load up above it, because then it goes to 64 here.
Nick, so let's say if somebody has let's say a 9 to 5 job and they can't be staring at charts all day. You would basically you post all of these notes, you
I'm
post
here
the videos.
to do the homework for you.
Okay. And that's what that's why they want you to do it, because
that's what I do all day. They pop in, and they ask me, what do you think of this? What do you think of that? What we're doing here all day in the chat room, I promise you, I'm not short on answering questions. I'll scroll up and see if we can see anything that goes unanswered. Had earnings last night at support zone, SKX. I don't do SKX. I deliver the question. Look, SKX, not a good starting spot at the top. That was a clear fail from before. So Sketcher. So whoever went long here, it closed here. So they didn't look left, because that was a problem zone. Like right here was a cliff. Then they came out to the cliff. So somebody in the chat room, if they said, hey, what do you think of SKX? I was like, oh boy, I would not buy it here. Let's see it get to and clear 52, then catch this $4. Up here, it's not an obvious entry point, right? So that was one question. Here, somebody's asking about they're looking to do a credit put spread. PayPal, that's my comment. Blink.
Let's see. Jason has a question here. What hours are the chat room open? So the chat room's
Sunday.
Open. Yeah, I mean today's Sunday, and
and they're here. If they're not here, they disappear off the page.
Yeah, and we just got off the session, which is just for chat members. I think it's 10 a.m. Eastern, Nick, right?
Yes, 7 Pacific. I'm in California. So it's 7 a.m. my time. And then I share the video. I record it and I share it.
Okay.
So today's video was only an hour and 20 minutes, because I did the homework. I'm trying to scroll back to see like a scent of, here's somebody that uses VWAP in here. Okay. So here's somebody asking about MVIS. Starbucks. The discussion is on all day.
And that's really the value there, really having you there in case anything happens in the market. You know, it could just take a minute.
I miss a lot. So they have, imagine hundreds of people's eyeballs looking at the whole market from different angles. We're not going to miss much. Okay. NEO, I like. XPEV, I like. XPEV, XP Engineering. So XPEV is the ticker. Where do I think Tesla is heading? I'm on record to say it was heading to 1,000 on one of these presentations on, I believe, 365, investing 365. And I'm pretty sure I got chuckles in there because it was nowhere near it. And I'm not a Tesla rah-rah. If you've known me for a while, I made fun of Kathy Wood, okay, when she was talking Tesla 4000 pre-split. I thought she was smoking crack. So turns out she was right and I was a dummy. So, but then I didn't join her. I looked at the biggest game changer with Tesla that people don't know about, don't pay attention to. They keep saying, oh, Tesla is so overvalued. So I pushed back on a friend the other day. What part is overvalued? What value do you think it exceeded that it's just too crazy? They said, well, it's a stock price. I'll say, okay, it's a stock price that's high. It's not overvalued. You didn't notice that this is no longer the same company. In 2018, even 2019, they almost went bankrupt because they had $1 billion, $900 million payment that maybe they couldn't afford. Well, what changed? This number right there. They now create $6 billion from operations in cash, their own operations. So they no longer need to borrow to exist. Now they can do that other stuff. So statistically, this company has a 25p price to sales. That is not crazy. Right. That is reasonable. It's high, but it's reasonable. Okay,
they're a tech company now, pretty much.
Well, they've always been, but they couldn't do anything. All their cash was tied into cars. Well, now they have a little bit of extra cash. Now they can go do solar. They can do whatever. I just mentioned they could be Uber. Now they have $100,000 order from a rental company. What if they extend that relationship? Maybe another rental company. And they say, hey, you wanted to do robo-taxis. Well, we're not allowed to self-drive cars on the street anymore, like a robot drive cars on the street yet. Why don't we blend the two and have a type of a DD/Uber company. You provide the cars, we'll provide the infrastructure. Let's do it. I mean, you think Tesla won't be 2,000 if that headline comes out? Yeah, I wouldn't buy it up here. I would buy the dip. However, I buy the dip. Sell puts, sell put spreads, buy calls, buy shares. Up here, it's not an easy entry.
Right.
Nikola, is it going to be the listing? Nikola is a binary event. Maybe they're fake, maybe they're not. If you want to gamble on it, buy the shares or buy the in the money calls. But here's the most important part. Since it is speculative by definition, we don't know on or off, fake or not. Don't increase the size. Decide, I'm going to risk X dollars, $200, $1,000, whatever it is. Take a position and don't add to it. Now you say, but I want to average down. I was like, okay, so whatever that number you decided on, be honest, split it. Say, I'll take half of it now. And if it falls, I'll add the other half. I don't add to my original. I just split the original in two. And I tell you, technically, if they can get to 1240, they can probably get to 15. Technically, that's a long base, but they better not lose the base because they can get the 7 if they do. So will it get delisted? I have no idea what they're going to say right here. You have to listen and see. But if you're just looking at charts, headlines aside, they have support that better not fail, because if it does, it's going to 6. They have resistance that's so sharp that if you break it. So let me see. Do I have
I'm surprised you're considering Nikola, to be honest, Nick.
I'm not. Somebody asked.
Okay. Okay. Yeah. Nikola's been, yeah.
I traded Nikola pretty well based on charts, but then
trading it, right?
Trading
it.
Yeah.
Not investing on it.
No,
Correct.
hell no.
Big difference.
So,
there.
But this is it. Look, a trend. I just said all of this and I didn't remember drawing those. So somebody must have asked me about it. Resistance and opportunity.
From the chat. Yeah.
From the chat. I mean, that's the only reason I do these charts. I don't serve people outside.
But that's amazing because, like, for example, I could, and this is the thing, like, if you're doing this on your own and you're trying to draw charts and you think you got it down and you try to make a trade, you blow up your account, that's one way. But if you have like that feedback where you can do, like, do the chart for them.
So let's say you're not in it to learn. You have a consultant on hand, on retainer. Me, I'll answer your technical questions. This was a head and shoulders. Look, I drew it, support, but if lost leg lower, and this was the measured move. It's usually as big as this. Eyeball, this is about as big as that, right? So they did that. So I'm here to find these potential pitfalls and stop us from making easy mistakes. So if you just use me as a fact that, hey, I'm trading this regardless of, I don't like to do options, but I want your opinion on the chart. I'm trading this. What do you think? I'll tell you my opinion and I may join you in the fight. So are my trades or day trades? Do you have catch up on what? I'm not a day trader. I trade daily, but that's not my goal. My setups with the videos usually have weeks on the clock. How will the environment policy affect ASTL? I don't know what ASTL is. So let's do NVAX for.
Yeah, really quick. Johnny is saying, I joined this morning, wanted to know where is the training page. So Johnny, send an email to Rodrigo. I'll be more than happy to send that over to you. Okay.
So I have to be honest. I'm not going to be nice to Novavax. Okay. So you think it's $100 stock. It's not. It's like a $7 stock. What they just reverse split 20-1 so they don't get delisted weeks before pandemic hit. If they had just waited a little bit, then they wouldn't have needed to do that. Why am I saying this? Do you know that this company has been trying to pass something since 1989 and not one drug made it to market? Did you know that? That's Novavax. Actually, let's go to a 3-month chart. Easier. I was trading it here. I bought it at 8, got to 9, pre-split. So you got to divide everything by 20. And then it got to 16. I got out somewhere around 15. And then it crashed to 80 cents. I bought a $1 call. I made money on that call. And here we are again. So they promise us that this one is different. But please don't average down in this one. They have failed since 1989. to bring a drug to market. I wish to God they don't fail this time, because apparently the world needs another vaccine. So for humanity's sake, we need them to succeed. But this company should be delisted. They are doing a great job with the stock. They should do a better job with actual getting the drugs to market. If they lose this line, they're coming to 60 or lower. What did he say? I'm just giving you my opinion. Technically speaking, if this is lost, I'm going to put it on record right here. I'm going to call it lost. And this one could get to here. But I don't short it because Nic said it's going to there, because Nic didn't say that. Nic said, you better hold the support. And usually this happens by a bounce like they're doing. They will definitely have resistance up here. I'll move this one. Okay, so by the way, look, buy the dip. So I'm not like against it. I'm agnostic and I share opinions. Buy the dip with a tight stop. So let's move. I'll leave it here. So I'm going to put another one, because there is definitely going to be resistance, and I'll show you where. There's going to be a resistance zone here. Sellers lurking. So if this rally bounce comes to here, they're going to face sellers. And if this does that, and it comes back to here, and for whatever reason, loses either this or most definitely that, I think they'll try to get to 60 or 45 with a lot of supports. They have support here at 109. They have a lot of support at 78. Keep in mind, this is a reverse 20-to-1 split stock. So it sounds like it's a fancy $100 stock. It's not. Okay, so what other stock there was? ASTL. I don't know that stock. No lines, so I definitely don't know it. Algoma Steel. So steel is, well, since I do know X. Whoa, what happened? Holy cow. Okay, so earnings, US Steel pop. This is not an obvious entry point into 28. That's on steel. So if this is what US Steel is doing, ASTL, similar style. Volume profile, look left, tells me that this orange line, I don't draw it. It's actually automatically drawn, is going to be hideous to overcome. So this is not an obvious entry point. Resistance through 1180. Penny stocks, JAG-X. I can comment on penny stocks charts. I don't know their fundamentals. That's on you. And even then, the charts could be misleading. I can tell you that there's a lot of support below where they bounced from. So anything below $1.77, $1.80 is support. But if you lose that, then you level down to $1. So the bulls have somewhat of an advantage, but then they have this massive beast to deal with. So if I go to 120, these are the no entry. So 2.3. Do not buy it into 2.3. I think there's a lot of sellers there. If it gets to here, I would book. Ocugen, I know I have lines. There you go. This is your beast. Nowhere, I would not get in long into this tall, thin candle. Let me see on a daily chart. Yeah, so see where this failed? Look left. Failing zone, failing zone. Okay, so it might not be the perfect top, but I don't want to be stuck long because I came in so late. Zoom, I already talked. Let's see, Cost. Cost is a great company. Not an obvious entry point, okay? So it doesn't mean it cannot rally higher. It's just not an obvious entry point. Closer to 470, ideally 455 to 460 would be a better entry point. If it ever gets to 440, that should be a good buy zone for conviction, somebody that doesn't want to day trade. And when a stock does this, I take it off my watch list. I set the alert and I move away. The first alert is here. When you revisit 465, I would not touch it if it's above 465-ish. I need it to come back and test for footing. That's how breakouts should happen. This new mode of breaking out and taking it to the moon, it just makes for a weak base. Target. it's definitely not an obvious point of entry because of this fail. So look how long they spent back there, and then they fizzled. So now if they take out 265, chase it to like 290 maybe, but not before. First 262 at least, and then you have so many fails into 265. So if you wanted to be safe, 266, this one is the threat. These two, you don't want to get caught chasing that and then it goes, or buy the dip where 251 or lower. So I'll put I want an alert that doesn't fake me out. CCL. So the whole industry is in shambles. They're still trying to rebuild their earnings. By the way, I only have 5 more minutes left, Rodrigo. 5-minute warning for me. Okay, so I shared along on CCL and it's working out fine. And this was my ideal target. But if it gets to here, I'm out. Me. I'll take the 15% yield. I'll leave the other 15% for somebody else. I don't want to be faked out because I don't know what the people are doing. So yeah, I heard you about Wish. So settle down. We'll get to it. So this is a good base that makes for a support zone. But the whole market, this is a mother of all head and shoulders. If it ever loses this, get out. You will get the chance, but that would not, I don't think it will do that alone. All right. Wish is a broken stock, not a broken company, but I got to tell you, I get icky when I'm long, but I've tried to deal with the company, and it's just weird. It's like, I don't know what it is, like an MLM or something. So the P&L looks fantastic and the stock is like death. So I'm missing a piece of the puzzle. And when I'm missing a piece of the puzzle, then trading Wish is a complete lottery ticket, meaning I don't risk a lot of money and I don't add to it. Whatever I have it through December. It works out great. Doesn't work out, forget about it. The chart says the Bears are in charge. Every floor the Bulls try to make, it turns out to be a trigger. So 460, if it's lost, it's going to be close to a $2.50 stock thereafter, which logically says that what with this P&L, that can't be. So 6.4 or higher could bring a spike to 10. So don't short it, but don't keep adding to it without new information. Do I buy at the money calls or sell at the money put spreads? I rarely do that, the at the money sold put spreads, but I have done it. I did it with PayPal and a couple other companies last week or in the last 2 weeks. So I do it. But if you tell me to give you a trade that you don't have to manage, I'd rather give you a trade with an 85% odds of success and a 15% yield. Therefore, clearly, you know what you're talking about, a lower delta that I'm selling and a more money at risk. So I would rather risk more money at a safer distance than risk less money and have a coin flip. Be big. I've looked at it a few times. It's a micro cap. This is a base if you assume that this rally was legit. So if you lose 4.5, you may get to 3.8. But the assumption is that, okay, the bulls are basing. If there's no earnings or anything, the first level of resistance is going to be into 6 and into 6.8 and most definitely into 8.
Yeah, really quick here, guys, and just for awareness here, once Nick heads out here in a minute or two, I'm going to stay here for a couple minutes answering any questions if you guys have any about the chat room. But Nick, let me know how you are with time, and if you don't have any closing remarks here.
I'm gonna wrap it up right here because I'm getting yelled at from back there. I have a family engagement I need to get to. So somebody's asking me, do I think Apple will rally? I can't tell the future, but I can give you the lines you need to watch. I can tell you that the open interest does not suggest a rally, but I also shared with you a 165 scenario if the stars and moons align. So there's going to be a lot of sentiment trading. Apple has a box, trade the box. It will ping pong inside the box and chase the breakout of the box. So if they go above the box, expect them to burst into the next level of failure, 157. So if I'm not long Apple at 153, I don't take longs. I wait for the breakout and I chase it after 153, and I get out into 157, or at least expect them to try to sell it here. And then if I'm not long before it gets there, I should wait for a new high to chase. Conversely, if it falls into 146, it's time to look into swing trade opportunity for the week. But I cannot tell you, nobody can tell you which way the stock is going to go. What I can tell you is what lines to look at. First tight line is 150.9 versus 147.8.7. Those are the it's literally look left. I mean, who doesn't believe in technical analysis? Look where I'm at and look left. Is it to the penny or not? Look at these three. 1, 2, 3, 4 days, 5 at the same exact value, which was the base for this candle, the top for this candle. I mean, what? That's not a coincidence. All right, so I'm going to get out, but before I leave, I promise you the number is scary when it's 4 digits to get into a program, but you will get all of it back from Benzinga. And I promise you that I will try to change your life with trading, with good habits. When the headline says trade like a pro, I don't mean be paid to trade. Have pro habits. So the pros win because they have a method. Get one. If you don't have one, I'll teach you how to get one, your own. Don't get mine. Get your own that fits your personality. That's it. Get in there. Get in there.
All right. Sounds good, Nic.
Okay. I'm going to leave, and I'll stop sharing, and hopefully you can pick it up. Thanks, everyone. I really appreciate it.
Cool. All right, Nic. So guys, if you enjoyed basically the presentation today, what we went over with Nic, feel free to join the chat room. We're there all day. We do this every day. This is just a sneak peek, to be honest. And we just came from the session that we had for chat members only on a Sunday, on a Halloween. All right. 2 reasons, and we're still here. Right. And we do this every day. And there's people in the chat room on Saturdays, on Sundays. There's no time cap. You can be there all weekend if you want. And there's people from all over the world. So it's pretty fun and exciting to talk to traders from all around. But ultimately, guys, even if you have a 9 to 5, you can still do it, because even the sessions on Sundays are pre-recorded and uploaded. If you attend live, you could pretty much interact with Nic in a much personalized manner, because it's only for active members, obviously. So even if you have 9 to 5, you just pop in the chat room 1 or 2 times, ask the question, talk to Nic. He's going to answer you directly, whatever question that you have, right? But if you're more of an active trader as well, or you want to actually take a different approach where you actually are more hands-on, the chat room's there. The chat room is for you. If you're trading full-time, 100% more, I have to say. I am an options trader. I've been one for several years, and I can tell you that, Michael, it's for 1 year. This is for 1 year. I can tell you that my learning curve with options just exploded to the moon once I started trading with Nic, trading around Nic, asking him questions, watching his material, watching his videos, going to the sessions on Sundays. You guys don't know what you're missing out. If you think this is cool, wait for the sessions on Sunday. Join and find out, right? We just had one today right before we came here to do this education workshop. And it's pretty fun to see people learn, get ahead, and actually change the way they trade, and for better. John is asking, is the subscription still in place? Yeah, everybody will get a laptop if you join today, first-time people. So we still have some laptops left, Mr. John. But ultimately, yes, this is by itself a monster tool, having Nic Chahine at your fingertips for direct messages, so you can keep track of all of the trades that you ask him feedback on. No, Gene, it's not. And basically any question that you have, right? It's pretty much like your one-on-one conversation with Nic, and you can, ask him about a trade, ask him about a strategy, ask him about a chart, so that you can see if your charting is, going in the right way. Okay. Now on top of that, you do want to, when you're trading options, you want to take it, you want to put some time into it, not treat it as a hobby, try to treat it more like as a career, because it is a career. It's not a hobby. and people make a full-time living and more out of this. And even if you're just looking to make some income, it's still good to actually make income, not blow up your account, right? So instead of blowing up your account, trying to do things on your own, trying to figure it out, join a community that basically is here to help you. Join a community here that is ready to guide you, to hold your hand and help you become a successful options trader. Because trying to do that on your own, you're going to get bruised up. Okay. And in some cases, wiped out, many times wiped out. I think like 90% of retail traders don't make it after the first year. And a big chunk of that is after 6 months. So if it's not working for you and you'd like to be more successful, then join the chat room, join our strategy, join our community so that you can be part of us. You can trade with us. You can talk with us about every market event. We talk about so many different things in the chat room, and we're adding more things, more and more there. So it definitely feels like, even if you are starting, it definitely feels overwhelming. But if you are trading with the right community and the right people, it's not going to feel as hard, right? Because you're going to have like kind of like classmates, right? But or trading partners, trading friends, and then your trading mentor, Nic Chahine. That way, you guys all communicate, connect with trade ideas. You get trade ideas from the other members. They get trade ideas from you, from Nic. Nic gives you guys the strategy on how to trade those. And ultimately, like you saw that guy in the chat room, like some people will blow up their account on their own easily, but we do our best to help them. And that's what you saw. That's what Nic was showing you in the chat room. So basically, even if you think you know what you're doing, and it never hurts to get a professional expert opinion, right? Get another set of eyeballs on it. Because if it's just you on your own vacuum trading, I tell you, I've been there, you'll end up making some wrong decision. I mean, you'll make wrong decisions, probably more wrong than right. And I don't know how long you can actually blow up your account until you actually just quit on the market. And the goal of this is to help you guys be successful traders. And if I can save just one person from blowing up their account, that is good enough for me. Because no, when I started, I blew up my account twice, and there was nobody, no education, no direct chat rooms with real verified options experts that gave you live support. Okay, it's like almost like having a one-on-one with Nic in the chat room, because you ask him, he talks to you, you talk to him, you're having a one-on-one conversation. And it's even better when you have an entire community there that pitches in here on topics that you guys are discussing, because that's really the community, right? That's the benefit of it. So let me know if you guys have any other questions here on the chat. I definitely think it's going to help you, especially if you're new, even if you've been doing this for a while. I know people that have been doing it for a while, not profitably. So being profitable for over 2 decades with spreads, it's a way, like much safer way to trade options. Like you got to trust me on that. Like I've been trading calls and puts at the beginning, and it's just a volatile portfolio. And there's a time for everything. But if you're only doing that, that's a problem. If you're only doing buying calls and buying puts, that's a problem. And you need to be able to, you need to look into becoming a complete options trader, not just a call and put buyer. Okay. That's the most basic type of trade. And it's the most famous type of trade. It's the one that can give you quote unquote unlimited gains. But a lot of those expire worthless. And who do you think gets that money? The seller, and in via the spread, the actual brokerage bank that is doing that transaction. So if you're going to be doing crazy calls and crazy puts, if you want to go ahead and try to blow up your account, you might as well just send a check to Goldman Sachs. Okay. If that's what you're doing, just buying calls way out of the money, pretty much gambling, right? Something promises you unlimited gains. That sounds better than the lottery, right? Well, it's a lotto ticket, right? So we're definitely trying to do more conservative trades. We're trying to do more trades that are safer for our account, trades that we don't have to be looking at every second, that we don't have to be, going over every little detail, because we're going out and honestly, if the stock falls to that point, owning it is actually a blessing. Like owning Tesla at 600, like who wouldn't do that, right? But yeah, it's just a different strategy, and it's part of becoming a a professional options trader. You can't just be doing calls and puts. You can't. Like I talk to people like Nic is one. Like Nic's been doing this for like 2 decades, but I talk to people that have been doing this for 40 years. People that do this at money management firms, people that do this at equity firms and such, at hedge funds. It's not just calls and puts, guys. You have to learn how to do the other types of trades. That's part of being an options trader. Otherwise, you're not, it's like, you're going to a battle and you're not using the full arsenal, right? You're just using like the little bayonets, right? And you're leaving the tanks and the jets and all that stuff. Jay, you're gonna have to email Rodrigo. The laptop is 100% complimentary. It doesn't pretty much change anything in the price. It's just a gift we're giving to you guys for the Halloween, to the first 10 people only. All right. First 10 people only. So how do you do a credit put spread? So that's a great question. You can go, I mean, Nic has a ton of educational videos. We went over this like many times here in the presentation, but we do it every day in the chat room. So feel free to join there. And we do have a ton of educational material so that you can go ahead and educate yourself there and make sure that if you have questions, you can easily just go and ask Nic or just check out the videos. All right, guys, and I'm just going to show you really quick here some of the reviews we have here. I think you can see them. So these are the reviews from Trustpilot. I don't know if you're familiar with that, but this is basically customers that have done reviews here and about everything. So solid company, 5 stars, worth every penny. They love stocks and bourbon. Great service, real-time news. So this is part of the support that I'm talking about. Basically, this is part of our mission, which is basically helping retail traders across the board. As you can see, Nic is very helpful, extremely helpful here on a Sunday on Halloween, and just coming from a session that we do for chat members on here, the Options Inner Circle. So we go above and beyond to help you guys, to give you education, to give you the tools that you need to become a successful trader. Part of that is trading with our community. The community in the Options Inner Circle, it's only for options traders. There are some people that are just there for the education because they're not trading yet. All right. So because some people, sometimes a brokerage might require you to understand certain levels of options. So some people are just getting the education so they can get approved at their broker to trade different types of options. And that's great. So it serves different purposes. You can do it for education. You can do it for the trades that you're going to get every single day. You can do it for the feedback that you're going to get in your strategies, but ultimately you have to do it for yourself because if you're not getting the results that you want and you're doing the same thing, it's maybe it's time to try something different, something that's maybe less risky, something that makes more sense with higher win rates, with higher probabilities of success. 85 to 90% win rate on credit put spreads. That's the name of the game. Consistency is what it's all about. It's not about getting 1 or 2 YOLO trades in. It's about doing good trades consistently through in and out, regardless of market scenarios, and not having to be stuck looking for news every single day because you will have a set strategy with proper risk management on every single trade. That's what I like about Nic. That's what I like about credit put spreads. If you haven't done credit put spreads, it's definitely worth looking into it because it's going to give you a better perspective on options. You're going to be able to understand options. And if you need any training, any coaching, don't worry. We do that in the chat room. That happens all the time. We do that every single time. So those are some of the reviews, guys. I just wanted to give you guys a bit of that. So a link. Yeah, we're posting the link there in the bottom. The sessions are in the chat room. Tiago, send me an email. I put my information there in the chat. This deal is going to expire at midnight today. Halloween special, 78% off, just for you guys for being here today. David, for an absolute beginner who knows nothing about options, how long would you say it would take to become profitable? I mean, no one can tell you that. To be honest, that question is just impossible to answer. And I can't tell the future. But I'm not sure what you're trading now, but I can tell you it's never late to start trading responsibly and to start being consistent with your trades. It doesn't matter what account size you have. It doesn't mean that because you have a bigger account, you're going to be irresponsible, or because you have a smaller account, you're going to be irresponsible. We make smart trades regardless of the account size. So, if you're looking at a 15, 30, 40, 50% gain, average around there per trade consistently, that's okay with me. Your trade shouldn't be all glamorous where if you don't get 10,000%, you're not happy. 2020 was a bad year to set proper expectations to retail traders because a lot of retail traders think that stocks only go up and they go down as well too. So a lot of traders in 2021 already have gotten washed out of the market. So it's important to take your options education seriously. You can get blown up like in a matter of seconds. So it's always important to trade responsibly. And if you're 1,000,000% new, like you're saying, David, I would definitely look at the education first, which is in the chat room, and make sure that you're following Nic on the sessions that he does for chat members. That's where the juicy material is discussed, all the specific trades that people have. We break down the news that, if something happened during the week or during the weekend, we adjust the portfolio as a community. As a community, Nic is sharing every single trade that he makes, and understanding why he makes the trade and how he makes the trade. That is valuable education that you're not going to find anywhere else, because this is Nic's strategy. It's his own strategy. And to be honest, it's definitely more my style. With call, I mean, if your stock goes down 10, 15%, your call is going to be down maybe double or triple that. And that's a pretty volatile way of trading it, and it's definitely not my thing anymore. I will do calls and puts for specific times, but for the most part, it's going to be a credit put spread, which is a lot safer, and I understand my risk completely, instead of a call where you can lose 100% of it because of the promise of unlimited gains. But as you know, the market is pretty crazy. It's always going to go up and down regardless. So instead of trying to bet that the stock is going to go up $5 in 1 week, how about you just bet it doesn't drop 50% in 2 months? That's a wider bet. That's a safer bet. So that's probably in the camp where I want to be. So guys, it's definitely been great hanging out with you guys. I'm going to leave the link here one more time for you guys to be able to join the chat room with Nic. And I'll leave the contact there if you guys want to reach out at any point, and let us know if you have any other questions. There's an email in the chat, and we're definitely looking forward to you guys joining. Definitely looking forward to having you guys being part of the community here at Benzinga. We love retail traders. That's really who we are. And we're looking to pretty much continue helping you guys, not just in these sessions that we're doing, but also in the one-on-ones that we have in the chat room, of the education that we're constantly putting out, so that you guys can become more educated options traders. And if you're learning, you can actually learn and profit from learning, instead of learning by blowing up your account, which is what happens to almost every retail trader. So thank you very much for joining us here, guys. We appreciate your company here on Halloween. It's a fun day here. So feel free to reach out, join the chat room, 7-day money back guarantee, 78% discount, expires at midnight. You keep the discount ongoing as it renews. This is for the year, and there is a laptop included for the first 10 people that join. Any other questions, just reach out, and I'll be more than happy to help you guys with anything. Thank you guys for your time, and we'll see you on the next time.